mostly red today. The 10-year note yield here, you see 162. Lots of questions about where we are now, where we're going to go from here after the busiest week of earnings season. Steve Weiss, my headline of the week is this: big tech delivers. Big tech stocks, though, do not. The Nasdaq's flat this week. You take a look at the blowout reports. Everybody had one. Facebook's up 6%. I'll give you that, okay? Amazon, blowout, up 1%. Apple, blowout, down 0.5%. Microsoft, blowout, down 4%. Alphabet, blowout, up 2.5%. What's that say? What does that tell us about where we are?
Well, I think what it tells us is that we robbed from the future. In other words, the market traded up in advance of the earnings. It was no secret that the economy was going to do extremely well. Companies were going to do extremely well in reporting. So you got a lot of that before they reported, and then it was somewhat anticlimactic. Now, that's not unusual to sell off on earnings. So I'm not that concerned about it. To me, it's actually somewhat emboldening because I think you see this growth continue. The guidance also was pretty good. If you take a look at that, and very few companies said, hey, well, you know what? We don't have the visibility. We're going to pull back. You're on your own for the next quarter. No, most every company and everyone in my portfolio said, here's what we're going to do next quarter. Some gave guidance for the year, which has been increasingly unusual. So I think we're fine from that standpoint. My issue, my concern's not there. My concerns are more with the economy overall, how strong it is, and rates. So right now we're seeing inflation pick up. We still got a Fed that's saying, hey, steady as she goes right now. But we're only firing on a couple of cylinders. We've got China that's doing well. We've got the U.S. doing well. But we've got Europe that's still in a recession. I don't even want to talk about emerging markets like India. So what happens when we have that synchronized global stop their massive purchases every year? And that could be a flashpoint for the market. That'll be the ultimate buying opportunity, in my view, because despite the inflation numbers, as you pointed out, 10-year is lower today in the yield. So I think we're okay for now, but it's a race to when you can get that performance in before, the cards are off the table.
Now, I guess, Pete, there's some who are thinking, okay, maybe this is as good as it's going to get for earnings, and maybe this is as good as it's going to get for growth. GDP off the charts. The economic data today was off the charts. Maybe this is as good as it's going to get for liquidity. Kaplan, he's not a voting member, the Dallas Fed president, but he's starting to talk today about, hey, we need to start talking about taper. What do you make of that? Is that at play in any way as to why the market reacted the way it did this week to absolutely blowout numbers from arguably the 5 most important companies within the market?
Yeah, that's an interesting concept, Scott, but I don't know necessarily. I think that's part of the play. I think the other part of the play is that we've had this great rotation that's been going on now for quite a while, at least the last couple of months, while we had the FANG stocks that everybody's been focused on so much over the last few months relatively flat. And we've been talking about that for a while now. We've been talking about the lack of performance and when are they going to kick back in. They still haven't kicked back in, of course, but in the meantime, we've had just take a look at the year-to-date numbers from the industrials, from energy, from financials. You go down the entire list, materials, and there has been this great rotation. And we've had this bit of a pause outside of 1 or 2 of those big tech names that have made pretty substantial moves year-to-date. But most of those moves actually came in the second half of 2020. So I think it's a very healthy right now, Scott. The only thing that really does truly stand out more than anything throughout earnings season for me has been everybody is referring to the costs going forward. What's going to happen? The lack of supply, those kind of things, I think could be very, very critical going forward. And that's going to be something that's going to really play a big part, I think, going forward. We didn't have to deal with as much of that now, but I think over the next couple of quarters, it's going to be really interesting to see what the shortages do look like. Will that continue to be part of the narrative? And if it's not, then that's fantastic. The markets have plenty of room. But if it is, we got a problem.
Well, I don't know. I mean, you clearly don't think we have that much of a problem because today you bought Apple calls more, you bought Microsoft calls more, and you bought Facebook calls more. So maybe you think this is just a pause that refreshes and that these stocks start moving again.
I do. That's exactly how I feel. But I'm talking about quarters out, though, Scott. I'm talking about going out 3, 6, 9 months and looking out from that perspective and seeing that kind of issue going forward with some of the supply constraints and the costs and everything else. I mean, every single earnings we've heard practically in almost every sector, we hear the concerns about prices going up and input costs and all of that. And I think at some point, that will be an issue. It hasn't become an issue yet, and maybe we'll be able to help out on the supply chain. We'll see. I know the president's very committed to that side of things, which is great. But I think the problem will be, if that's going to be the case, we do have a problem. I think in the near term, and I'm talking about 1 month, 2 months, 3 months out, I think we're still okay, and I think we can see what should have been the reaction and wasn't. Apple, Microsoft, some of these various names, Facebook. I think that's
Amazon.
why I feel very comfortable, Amazon, and I feel very comfortable, Scott, about owning some calls on top of the stocks that I own rather than the usual program that I've got where I'm selling options against it. Volatility's come in, and with that, it gives me an opportunity to maybe take a nice ride to the upside if Microsoft can get anywhere close to where they just were the day of earnings when they hit all-time highs.
All right, Shan. So Amazon's a good kind of place to zero in on. I mean, okay, so the stock hit a new 52-week high today. I'm looking at it right now. It's up 1% on a absolute blowout number. Now, the stock year to date running into the number, it's not like it was a runaway, juggernaut. It was up 6.5% into the number. It absolutely blows out the number, and the stock gets a little bit of a lift from there. So what are we to make of that? And the good thing is on the show today, you own Amazon. I mean, almost everybody on today owns almost everything that we're talking about in terms of the FANG perspective.
Well, if we go back 6 months ago or so, when this period of underperformance for the FANG stocks was really starting to hit its stride, I think what we were all concerned about, or what the market was concerned about, was this potential rotation and this binary move out of big tech and into other sectors. And I would say we've actually seen that binary move in that we've seen the relative underperformance of these names, and we've seen a movement in breadth, or an expansion in breadth, across the rest of the market. And that goes to the fact that investor interest is looking at sectors outside of big tech. That being said, the challenge for big tech right now is that they were so strong during the pandemic, and the year-over-year comps are continuing to be really strong, and that's become somewhat expected because they were insulated from many of the challenges that other companies in other sectors and industries were facing last year. There has been a continuation in enterprise spend. There has been clearly a need that has gone unmet previously for companies to invest in technology in order to facilitate what we're doing right now. But I think that what is most important is if you think about over the next 2, 3, 4 years, going back to Pete's comments about inflation, where is that inflation going to manifest itself? What companies are going to be able to have those different levers for operating costs, OPEX, CAPEX, to be able to pull those levers in order to make sure that they're maintaining their margins? And I'm going to put my bet on some of these big tech companies. They know where to spend money that's going to generate shareholder value. They know how to potentially pivot their fairly broad portfolios in order to maximize their gains. And so for me, I look at this as yet another way that these big tech companies are well situated to take advantage of some of these inflationary forces and potentially mitigate bottom line impacts from that. So could we see a continued sort of pause or consolidation? We were looking for that. We felt like Main Street was ahead of Wall Street this year because Wall Street was ahead of Main Street last year. And so I'm not concerned about it. I actually think this is a great entry point over the course of the next couple of months for those people who may still be somewhat on the sidelines in equities.
Okay, all right. Brenda, you own all of the stocks: Amazon, Apple, Facebook, Microsoft, Alphabet. There is no waning optimism on Wall Street, and it's worth pointing that out today. No less than 22 target bumps from analysts on Wall Street for Amazon today, the highest being 4,600 from Cowen and JP Morgan. You've got 3,4,500s from Wells and Deutsche and JMP, and a number of other lofty numbers within that too. So, the street is not backing away from the optimism in any way, shape, or form going forward.
Right, the street isn't, but I think what the market's been telling you is that, it is anticipating that at some point, sequential earnings are going to slow. Sequential earnings growth is likely to slow for a lot of these large companies. But I think what we saw this quarter is that certainly hasn't happened yet, and I think we were all expecting that it might. Just looking at a company like Apple, for example, we had expected that some of the iPad and iPhone sales would likely slow sequentially, and that's certainly not what we saw. Clearly, people are not done buying there yet. And same thing for Amazon, where I think this is a trend that really was solidly in place pre-COVID, and really e-commerce has picked up a lot of ground over the last year, and we think it's here to stay. I mean, we think in terms of Amazon, this is a trend that's here to stay. E-commerce still makes up a relatively small percentage of total retail sales, so we think there's plenty of room to go. And as it relates to Amazon, I think if you look at the profitability of the company, as AWS continues to grow, as advertising continues to grow, those should continue to cause the company to become more and more profitable. So there are a lot of really solid stories here. I think for us, big picture, if we look at earnings coming into the first quarter for the S&P 500, we were looking for 24% earnings growth. If we take what's been reported thus far and what's expected from the remainder of companies that haven't reported, we're looking at earnings growth of more like 46%. That's a huge percentage increase. I think it's what we needed. It's really telling that earnings expectations could be low this year that are out there. And I think we need to see that. It's a great sign that earnings are finally growing into where the stock market has already gone, and there could be more of that to come in the remaining quarters of the year.
Steve Weiss, I need to correct myself too. The highest target right now on Amazon on the street is not 4,600, as I said. It's 5,500. 5,500 at Susquehanna. Steve Weiss, $2,000 higher than where the stock is trading now. Are we getting out of our minds? I mean, $5,500 for these stocks?
Well, clearly that analyst is looking for attention, and that's one of the old Wall Street tricks, is that you have the highest or the lowest price target out there. So you get the phone calls that say, hey, why are you so much above everybody else? Look, to me, analyst price targets are directional. I think it's lunacy to have that. I hope they get there because I own it, but I'm not banking on it.
But we're not.
I'd like a nice march upward.
Sure, but what we're essentially saying is we're trying to get where the direction of the narrative is, if you will, right? You take them collectively and you say, I've got 22 new price target bumps from Amazon today. So collectively, that says something about where the narrative is. And I venture to guess, if I looked at what the most recent target bumps were for the other big stocks that I mentioned out of the tech sphere, they'd be all the same too. You'd have 20 bumps across the board. So while maybe investor optimism is waning a touch, the market reaction would tell you as such. Wall Street is not on board with that. They're like on the bus, and the bus is like full pedal to the metal.
Yeah, I think part of the issue is while we know Amazon and the others have picked up incremental customers, it's difficult to see where this big untapped audience of stock buyers is coming in for Amazon or Microsoft or Apple. It's money that's on the sidelines that's more likely going to buy it. Because if you're in the market and you missed Amazon up to this point, I don't know if you're going in there today and buying it to wait for a pullback. So I do think the street is got to raise their price targets. How could you not when they blow out the numbers? So, but yes, it's a sell in the news. I'm not concerned about it. I don't think it's any, prophecy on the market overall. We've seen it before.
So, Shannon, speaking of the market overall and price targets, Jonathan Golub over at Credit Suisse today raises his S&P target up to 4,600 from 4,300. I bring that up because you're going to, now that we're finished with April and you're going to move into May, you're going to hear a lot about sell in May. Are we going to, witness that this year in the market? Golub is not the only bit of optimism. UBS today says markets can continue to advance further. How do we think about the markets more broadly?
I wouldn't be surprised to see some consolidation. I think it's important when you're looking at price targets. A lot of investors assume that they don't think about the path dependency on how we get there. And so, if you're thinking about, the potential for us to look at those earnings estimates, to Brenda's point earlier, valuations right now in the S&P 500 are really priced to continue to see meaningful earnings growth in the back half of the year. And we have a couple of headwinds. I mean, we've got pending increases in corporate taxes, to the points about input costs going up. We have some potential hindrances to earnings growth that we need to think about factoring in for the back half of the year. I think what we're going to see in May is we're going to see a sigh of relief. If you look at those first quarter numbers for all of the major equity indices, they were very strong. If you look at April's numbers, we're going to print another strong month. We're looking at, over the course of the summer, more of this tax legislation is going to be discussed. We're trying to figure out how much of that spending is going to transmit back into the economy. There's starting to be what I think are unfounded concerns about the froth in the residential real estate market. So there are going to be some things that weigh on that investor optimism. But if you go back to what are the alternatives that are available to you, I'm looking at my stock portfolio and thinking if I need to generate long-term gains and even income for my clients over the course of the next year and a half or so before rates start to rise more meaningfully, I'm looking at that stock portfolio. And so a consolidation in May, what a great opportunity to make sure that your equity allocations are situated appropriately for the next couple of years.
Pete, I mean, it was Kaplan today, by the way, to Shannon's point, who was talking about heat in the housing market. Are we only as good as all of the liquidity that we have? Is that really all we have, Pete? I mean, if you really do take some of that out of the system, we can't stand on our own 2 feet. I thought we just did like a 6 print on GDP, and Chicago PMI today was like the best in however many decades, and consumer confidence is just absolutely off the charts. That's all because liquidity. Please.
I'm sort of with what you're implying there, Scott, which is please, because I do think that there are a lot of different other driving forces that are the optimism that people have right now. And I can see it on a daily basis as I'm driving around through the Twin Cities. I see it all the time, Scott. I mean, there's a lot of different examples that you could point to, whether it's the housing market or whatever you want to say right now. And I don't think it's just liquidity. I do think that there is something more deeper underneath that. But let's be honest, a lot of what we have done so far is a big portion of when I say liquidity, that really has given us where we are right now. Now, can we walk? Can we run? Can we jog? I think we can. I think we can on our own. But it's going to be a very, very interesting process. And let's not forget, the vaccine acceleration has been huge. I think that is something that has become a huge factor for people because you can see the confidence, you can see the different states as they start to open up more and more and more. And I'm in one of the more restricted states here in Minnesota. But you can see it, Scott, as it starts to open up, there is activity and people are spending money in a variety of different ways. So, I mean, just yesterday I was driving down the roads and I was looking at Home Depot and I was looking at some of their competitors, Lowe's and Menards and some of the locals as well. The parking lots are packed, so people are out and about. They are out and they're, the masks are still there, but with the vaccines and everything else, there's a lot more comfort and people are spending money.
Yeah, I mean, to some who watch the markets and the internals and the technicals very closely, the reaction to earnings, more so than the earnings themselves, are the real tell. And that's what Jonathan Krinsky of Baycrest, who we follow and like looking at his research, is talking about today. He said it's the reaction that matters. As always, the reaction to the news is always more important than the news itself. And thus, for earnings season has not been producing great reactions. Well, there are pockets of the market that can work. We continue to think risk reward is broadly unfavorable here. With that, I bring in Mike Santoli. He looks as deep into the markets as anybody does. What do you think about what Krinsky puts forth? And that is the biggest tell right now. And you can take your cue from big cap tech.
Yeah, you have to be mindful of the dog that doesn't bark. So when you don't get the commensurate response in the stocks, I do think you have to look toward that and decide if the market is telling you something in terms of full valuations or something else, or just about what types of stocks are going to be the recipients of the incremental dollar. I would point out, this is the third straight quarter where we've had a pretty pronounced sell the news response across the board. You did not get rewarded for beating in the fourth quarter of last year or the third quarter. And that's a massive contrast with, let's dial all the way back to last summer. Final week of July, huge blockbuster FANG mega cap growth earnings. Everyone was just completely floored by exactly how profitable these companies were in the middle of a pandemic. And that created this huge acceleration to the upside and really a little bit of a blow off top in the Nasdaq. And what was the complaint up to that point and even after that? Too much of this market was all about valuation expansion of mega cap growth stocks and the ones that everybody owned in the top 5 in the index. Well, it's different right now. And so I do think right now it's much more dependent on the path of underlying earnings growth. Year to date, the 2021 S&P consensus forecast for earnings for the full year right now is up about 9%. Still heading higher, it seems. The S&P itself up about 11.5%. And you've seen an outperformance among the more cyclical type groups, which have a smaller weighting in the overall index. So I do think there's some restraint on what valuation people are going to pay, because we are wary of potentially yields going up. We are wary of eventually some kind of a Fed taper down the road, or at least talk about it. So I think that's the push-pull that we're observing right now.
Well, how much of the less liquidity, more taxes idea has really seeped its way into the market, and that's what we're witnessing more than anything else at this point?
I think it definitely, psychologically, it's acted as a little bit of a check in the last couple of weeks on risk appetites. We did see it actually in the retail investor sentiment numbers this week at a big drop in bulls, even though the market was flat. That's probably because, people at home don't like to hear about potentially capital gains taxes going up. I also think it's worth looking back to 2010. Everyone keeps comparing this experience to the huge run off the 2009 bottom. Very similar S&P performance in the first year. You did get some chop and some give back and pullbacks. And keep in mind, what we now call QE1 ended in June of that year. So along with what was happening in the stock market, we also had, that was the last time we had earnings beats to this level that we're seeing in this quarter right now. So a lot of it does match up with just the cyclical cadences coming off of a major low when you do perhaps start getting into peak growth rates for either the economy and profit.
And lastly, before I let you go, I'm looking at the S&P right here. 4,200 is a level that you are keen on watching as well. I saw a tweet of yours earlier today.
Well, yeah. So this is something that's a little bit, it's sort of a serious look back to those times when we had flirted with a round number, which in this case was exactly half of 4,200, 2,100 in early 2015. The market basically used it as a ceiling for 6 months. It didn't really have much of a pullback along the way. It just hugged that level. And we obviously did sort of give way that summer after you had the Chinese devaluation and everything. Not so much a forecast, but a reminder that the market can just hang around for a while once it does have one of these big moves and needs to consolidate it.
Yeah, interesting, as always. Michael, thank you.
Yeah.
All right, that's Michael Santoli. Let's talk about what you guys are doing in the market relative to the conversation that we just had before and with Mike. Steve Weiss, you bought more Goldman Sachs, which is interesting too, based on the conversation about rates, the Fed, and tech and growth and value, all wrapped into sort of one conversation. Tell me about Goldman.
So I had a decent-sized position in Goldman. I bought it a little early. I should have waited for today instead of buying it yesterday. But they are particularly well-positioned. As we saw in the last quarter, doing extremely well, and I believe in a rising rate environment. So it's somewhat a hedge against my other parts of the portfolio, but it's also an overt push, obviously, on the Goldman positioning, their global positioning, just doing extremely well, growing their asset management. They did restructure the company, so not to a large extent, but in terms of asset management they did. I just think it's compelling here, extremely cheap. So right now it's my largest, although not by much. I still own B of A, but my two big financial plays.
Wow, it's now bigger than B of A, because I know how much you love that stock and Brian Moynihan, who you wax poetically about any opportunity that you get.
The most unsung player out there. If you look at the mistakes that have been made by some of the big banks, I'd say in terms of magnitude of errors over the last few years, in terms of what's been swept under the rug, it's actually J.P. Morgan. If you go back to the whale and you do look at some other finds, so none of them are perfect. Moynihan just doesn't believe in getting out there as much as Jamie Dimon, who's excellent. No criticism of Jamie Dimon, but Moynihan's lower profile.
So before I take a break, I want to get to Brenda. Brenda, Affirm is a new stock that you bought, AFRM. Talk to me.
Yeah, so this is a newly public company in the buy now, pay later space, which we think is going to be growing as a greater percentage of overall sales in e-commerce. Right now, buy now, pay later is only about 2% of global e-commerce sales. So Affirm is in a little bit of a niche where Peloton is one of their largest customers. They have begun to pilot a program with Shopify, which we think could really drive continued growth for the company. It is competitive space, but as I mentioned, it's a relatively small percentage of overall e-commerce sales that are tied to buy now, pay later. But we think this is really a growing area as more consumers are really tired of traditional credit card companies and paying interest payments, and buy now, pay later just is a much more economical solution for many people.
Okay, we'll keep our eye on that one too. Pete, we're going to get to some of the new call buys that you have a little bit later. I promise we'll do that. Also, still ahead, we're going to put the committee on the hot seat today because there are many stocks we need to discuss, like the ones right on the right-hand side of your screen right now. Twitter, Skyworks, Chevron, all pitched by committee members in recent weeks, many times, which is why they're going on the hot seat next. And NFL player Brandon Copeland joins us with his top financial tips for the new draft picks in the NFL. We're back at 2.
Ideas exist inside you, electrify you. They grow from our imagination, but they can't be held back. They want to be set free, to make the world more responsible and even more incredible. Ideas start the future, just like that.
Now that Wall Street has lost its interest in high-flying growth stocks, they're coming back to earth. While I agree with the bubble callers about this particular group, there's a simple solution to the problem of super expensive stocks. They can always short them. Watch or listen live on the CNBC app.
Tomorrow, NBC News celebrates extraordinary people who are inspiring America. Individuals who unite, empower, give to others, and change the game. The 2021 Inspiration List, tomorrow at 8 on NBC.
Global clothing consumption has doubled in the last 15 years.
We can change that.
When we buy better, we can wear it longer.
How great is it that we get to tell everybody how Liberty Mutual customizes your car insurance so you only pay for what you need? I mean, sorry.
Oh, what? How many move?
No, buddy. Only pay for what you need.
Liberty, 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 liberty.
We make USAA renters insurance for the stuff you love. Because if it's worth lugging up 5 floors, it's worth protecting for as low as 33 cents a day. It's that simple. USAA. What you're made of, we're made for. USAA.
Utmost. A must for a... Struggling boat. They say that the 3 men on board were trying to sink the boat before it could be captured, and on board, about 2,000 pounds of cocaine. Scott, I'll send it back to you.
Okay, Rahel, thank you. The investment committee, they're on the hot seat now. Steve Weiss, you are first, okay? Skyworks is what we're going to talk about. Top and bottom beat, sounds great. Stock, though, not so good. Let's show the intraday chart here. The outlook was not great. The stock's down 8%. You've repeatedly bought more of it. You've talked about it all the time. I'm sure some people have followed you into it. So what's the advice now?
Well, look, they did beat the forecast beat, the advice is buy it here. Look, let me put it in perspective. The street's missing that this is more than just a phone story. Right now, you got a $14 billion mobile phone market that's going by estimates, lots of research surveys, going to $50 billion by 2030. But more than that, you've got 5G overall in the enterprise that's going to $13 trillion by 2035 and $8 trillion by 2030. The total addressable market is unbelievable. Now, each cycle, 4G didn't have that. But if you took a look at Skyworks and Qorvo, which I also added to today, they outperformed over the first 8 years of the 10-year cycle, which they outperformed, guess what? Microsoft. They outperformed Apple. They outperformed the S&P meaningfully. Those stocks were up 5 to 6 times during that cycle. I'd expect to do just the same here. So this is a great opportunity. You've heard of diamond hands?
Yeah.
Well, these are paper paws because there's no thumb to hold on to it.
Well, you sound so
take
angry.
advantage of those with the paper paws and buy it.
You sound so angry.
I'm wired, man, Scott. I'm 5G wired. That's why
A viewer was concerned about you. They wrote in this question from Jim. On a tractor in his khakis on a farm says, "Dear Steve Weiss, do you regret not taking your Skyworks gains and moving them into Qualcomm like I told you? There's still time." What's your answer to Jim?
Well, first of all, take a look at my answer, Jim, is number one, take a look at Qualcomm today. It's down, number one. Number two, I'm not following Jim to Qualcomm any more than following him by putting my high school textbooks as my background when I'm on halftime report.
All right, that was a good one on the fly. I like that. Okay, next up.
Thank you.
Next up, John Ajarian is joining us on the phone because he has some explaining to do about Twitter. Okay, they beat top and bottom, but that stock is down 13%. Doc, are you there?
Yes, I am, Scott.
All right.
Yeah, my calls that I bought, we had several nice reads. We thought we kept rolling up. I became too much of a pig, and you know what they say about pigs getting slaughtered. So I stuck it out. Those 65 calls that I'd rolled up to, Scott, went out worthless, total loss. However, there was a big purchase just days ago of puts at the 62.50 strike that expire next week. That one was a much better trade. I have rolled down and exited those, and now I own the 56.50 puts in Twitter. I don't know if Twitter gets back to that October level, Scott, where it broke famously from that level, which was approximately $52, and it traded all the way down to over the next several days to, I think, a low of 30 or something like that. I mean, it was, 40, but it was just a terrible drop, Scott. And this is a similar terrible drop. You could put them side by side. So, I overstayed my welcome. That was not a good thing to do. 5 of 7 analysts cut their price targets this morning. And the growth is just not the same in this one as the other socials. So
would you?
I'm thinking.
Let me ask you this, Doc. Forgive me for interrupting you, because your position is through options. If somebody owns this stock and has been playing the stock through listening to you in options, you tell them to sell. Just get out now. That the daily users were meh. Growth is meh. I don't think the interview was all that great this morning on Squawk either. Andrew and Joe and Becky asked Ned Siegel, all the questions that you would want to know the answer to if you're an investor. And I just thought that the answers were like cookie cutter press release type answers, to be quite honest with you. I don't know what the investor takeaway from any of that was.
Well, I would say that one of the critical levels, Scott, is, again, that October 29th level when it was 52.40. I would set a stop at that level, because if we break that, you're going to see mid-40s on this move. I think after an aggressive sell-off like this, where you've come down from, a recent high of $78 down here now to 56, that there will be some nibbling, but very seldom are there one-day events. So I think you might get a chance to buy it a little bit cheaper to that person who is already in it, as you say, in the stock instead of the options. I'd say set a stop right around that $53 level, Scott.
All right, Doc, good stuff. Good weekend. Thanks for calling in. talking about Twitter with us. Brenda, lastly, and let's do it quickly. Chevron, at least earlier today, was the worst performer in the Dow. It may still be. What do you do with this one? It's your only position in energy. So, it matters to you maybe more than some others.
Yeah, it's our only individual stock position in energy. But I would say, for a company that's so focused on free cash flow growth, the fact that they did have a cash flow disappointment this quarter is somewhat disappointing. But I think a lot of it was weather related. And so as we look at going forward, still focused on the big picture here, where we're looking for 10% compound annual growth rate in free cash flow over the next several years, and to us, that's attractive. Chevron has continued to be the most disciplined company within the energy space in terms of capital deployment, so we continue to hold the position here.
Okay, we're going to take a quick break. The NFL draft underway, as you know. Brandon Copeland, NFL player and CNBC Financial Wellness Council member, joins us with his money advice for rookies. Plus, do not miss the CNBC Small Business Playbook. That's coming on May 4th. Join Robert Herjavec, Melissa Bradley, Gary Vaynerchuk, more of the most trusted voices in business to provide critical advice to help owners overcome extraordinary obstacles and stage a strong comeback. You can check out the full lineup and register now. cnbcevents.com/small business playbook. We're back right after this.
Labradoodles, cronuts, skorts.
It's a skirt and shorts.
The world is going hybrid. So why not your cloud? A hybrid cloud with IBM helps bring all your clouds together. That means you can access all your data, modernize without rebuilding, and help keep things both open and secure. That's why businesses from retail to banking are going hybrid with the technology and expertise of IBM.
Does your vitamin C last 24 hours? Only Nature's Bounty does. New Immune 24-Hour Plus has longer-lasting vitamin C, plus herbal and other immune superstars. Only from Nature's Bounty.
Stop hodling high fees. Osprey Bitcoin Trust is the lowest cost tradable Bitcoin product. Hold it in your brokerage account or your IRA. No wallet, no keys.
Interactive Brokers charges 1.59% for a $100,000 margin loan. Do you know how much your broker charges? Upwards from 6.82% at Fidelity or Schwab, to as high as 7.45 to 7.75% at E-Trade or Ameritrade. Move your account to Interactive Brokers and save at least $5,200, or much more if you're trading big bucks.
Did you know that Petco is now a health and wellness company?
I adore their groomers.
And their vets.
Our physical, social, and mental health cared for in one place. Petco, the health and wellness company.
I love two things. Eating high-quality cat food from Petco in the box it's delivered in. Same day.
Petco, the health and wellness company.
Start your day with all the support you need in Skechers Arch Fit sandals. Skechers teamed up with podiatrists using over 20 years of data to create a sandal that provides foot and arch support for all-day comfort. Podiatrist certified arch support for men and women.
Options action. Strategies from the street's top traders. New opportunities to profit from the market's hottest trends. Options action. Today, 5:30 Eastern, CNBC. Sponsored by Thinkorswim by TD Ameritrade.
Round one of the NFL draft is in the books, which means dozens of young players are about to become multimillionaires for the first time. Our next guest intent on making sure they preserve and grow their newfound wealth. Brandon Copeland is a linebacker with the Atlanta Falcons, also a member of CNBC's Financial Wellness Council, back with us live. It's good to see you again.
Always a pleasure, Scott. How you doing?
I'm doing well. Boy, you got yourselves a player, Kyle Pitts. Oh, my goodness. I can't wait to see what he does. I know you want to see what he does with his money. What's the first piece of advice you're going to give to Mr. Pitts?
Yeah, I mean, first and foremost, I'm going to tell him congratulations. Obviously, it's a dream come true. And then after that, obviously, I'm sure he has a great team around him. The good thing about coming from a school like Florida is you got a bunch of people who have, done it before who you can get some advice from. But first thing I'm gonna say is just save as much as possible. Save so that you can start to put some work into understanding money, understanding how it works, understanding how to put it to work for you. I think a lot of times we come into the league, and especially right now, the sexiest thing in the world is to invest, as we should be doing. But ultimately, we want to make sure we understand it fully and put people around us who we can trust, because most of the people in your life right now who you be turning your money over to, you just met them 2 to 3 months ago, right? So let's make sure we have a trusted team around us before we start just giving our money away and just saying, hey, good luck, take care of me.
I know, but it's a balance though, right? I mean, you're coming into this amount of money for the first time in your lifetime, and you want to have a little fun with it. You want to probably do something for your family, as we've heard a lot of players last night in their interviews after they got selected suggest that they wanted to do. But of course, you do want to grow your wealth. It's about wealth and growing it over the long period of time.
For sure. And I think that, we have to, again, like you said, it's a dream come true. These are the things that you dreamed of doing since you were a child. And then now you finally have that call from the team, and on paper, you are an overnight millionaire, multi-millionaire for some of the guys that were drafted last night, right? But the goal is not to just be a millionaire for, your stint in the NFL, right? The goal is for you to create a lifestyle that you can live for the rest of your life. And so we just have to make sure that we are making the purchases and taking care of people in a way that provides longevity for us. I mean, that's the most important thing, because, I think that philanthropy side of us, we want to take care of everyone around us, but ultimately you can end up, as we've seen before, you can end up hurting yourself more by doing that than doing things the right way for a longer period of time.
I'm looking at your list right now of sort of the most important things of advice, and the one that jumps out to me is, get comfortable with saying no. In other words, you can't be the First National Bank of Kyle Pitts.
Yeah. I mean, again, you just can't. You are not. Unfortunately, you just can't be everyone's. Funder. Like you said, you can't be the First National Bank for everyone. And right now, people will come to you with their dreams. They'll come to you with their business ideas. But again, that's why I think it's so important to understand money, right? And also, one of the things that I highlight in the piece that we recently did is we have invested for this opportunity, right? A lot of people will just say, hey, you're an overnight millionaire. Oh, you just hit a lottery ticket. Well, no, I've been running more than everyone else since middle school, since high school. I've been putting in more work in the weight room. And while other people think investing is just putting their money into index funds, well, I've been putting my time and effort into my body since I was a kid. And so you've invested in today, you're getting that payoff for this weekend, you're getting that payoff. And so when you think of your money, like instead of something that you just made overnight, more so something you've been working for years, it's a lot harder to just give that away as well.
You mentioned the new thing you did. It's coping with money. It's a video you did for Kiplinger. Wish you well with that. Wish you a good season too. Everybody's talking about the offense, but you're raising your hand out there and saying we can play defense too on our squad. We'll be following you.
Hey, man, I appreciate you. Thanks, Scott.
All right, we'll talk to you soon. That's Brandon Copeland joining us today. Coming up, the investment committee making more moves in this market. I told you we'll get to Pete's picks. We'll do it. We'll do as unusual as well. We'll do it next.
You see sales forecasts based on guesses. We see a robotic system getting a firmware update, a typhoon clearing in the South China Sea. Clean energy is trending on social media, and we see a 38% increase in demand for solar panels. See how C3 AI CRM for manufacturing analyzes thousands of data sources to make hyper-accurate revenue forecasts. C3 AI. This is Enterprise AI.
With a bang, energy and change came to into every part of our universe. Size big or small. It continues.
Change is all around us. Shaped by technology and human ingenuity. We can make it work for you and your business.
That building you're trying to sell, you should 10x it.
10x it?
10x is the world's largest online commercial real estate exchange. You can close with more certainty and twice as fast. If I could, I'd 10x everything. Like a coffee run. Or Fedora shopping. Oh. Talk to your broker. 10x does the same thing but with buildings.
So no more waiting.
See how easy? Don't just sell it, 10x it.
May 4th, join CNBC's Small Business Playbook for actionable strategies helping owners adapt and stage a strong comeback. Register now at cnbcevents.com/smallbusinessplaybook.
Global clothing consumption has doubled in the last 15 years.
We can change that.
When we buy better, we can wear longer.
We made USAA insurance for renters who make the most of their space and money. That's why we make it easy to cover the stuff you love for as little as 33 cents a day. USAA, what you're made of, we're made for.
Ready? Let's go.
Taking your speed up. Let's go. Come on.
Take the lead here.
Nordic Track, the home of interactive personal training.
It's not just a game. It's opened my eyes to a whole new world. It's where I find myself and get lost.
MissTV.com today to permanently get rid of mold, mildew, and stains forever.
And Shannon probably thought she was going to get off the hot seat before she even had to get on it. But no, we made some extra time, Shannon. eBay, a loser this week.
Wonderful. Yeah, I thank you for that. So we purchased this stock in February, actually. So I guess we were a little early. I think the stock is clearly selling off here based on some concerns about comps over the next couple of quarters. We're annualizing some really strong numbers for eBay. But we bought this stock looking at the longer term. If you think about their anticipating additional investments into their user experience, they're thinking about their payments platform. And so with the growth of collectibles, they're not all digital, right? There's some some real world collectibles as well. So we like this story over the next several quarters, and we think that there could be a positive surprise, both top and bottom, as we move into the back half of the year.
All right, good stuff. Thank you for that. All right, Pete, let's do some of your moves now. I teased them before. I want to go through 3 of the new calls that you've bought. Navios Maritime. Let's do that one first.
Scott, I don't have that. That's not one of my.
Oh, maybe I looked at the wrong thing.
Maritime.
All right.
It's okay. It's all right.
My eyesight's bad. Tell me about Annaly Capital. I don't know what happens sometimes.
Yeah, that one hit.
My bad.
That's okay. That's all right. That one hit today, Scott. I like seeing it. Very inexpensive, although it is trading towards 52-week highs, and I think there's plenty of room to the upside. Mortgage finance. There's the right place, right time. I think the stock goes higher.
Yeah, looking at NAP. You don't have NAP?
I do not.
No, okay.
I have Nikola, which I just got rid of Nikola, which was a great one. Oh,
the S was out.
Okay, all right.
I was taking a nap
and I will
when
tell
it was
you this.
really snap.
I'll be out before the end of the day because these expire at the end of the day. This was snap options that were purchased just the other day, and they expire today. So I will be exiting extremely fast.
All right, we handled that really smoothly, Pete. Monster Beverage.
Love this name. Absolutely love it. I talked about adding Celsius not too long ago to my portfolio in terms of stocks. I love that name as well. Energy drinks. Monster's another one. I think Monster's got plenty of upside. Saw some buying in there, and so I jumped in.
All right, good stuff. We'll do your unusual activity when we come back from this break.
Comfort, it's a vibe, and Skechers Beach Casuals have that casual look and feel that fits your style perfectly. They're lightweight, understated footwear that slip on and off for easy comfort everywhere your day takes you, relaxing by the pool or just bouncing around town. Chill in comfort with Skechers.
Of all the companies on the Fortune 500 in the year 2000, more than half no longer exist. Digital transformation isn't just a good idea, it's a matter of corporate survival. Enterprise AI enables organizations to use artificial intelligence at enterprise scale, solving previously unsolvable business problems to help you not just survive, but thrive. C3 AI. This is Enterprise AI.
Give me the detonators.
No! You first!
You are in no position to negotiate.
Really? Is this what we're doing?
The Bitcoin on here will never be yours.
Boom! Nothing can stop me!
So that's how you got into crypto?
Yeah, no. I invested with Grayscale. Bitcoin exposure straight from my brokerage account.
Okay. What happened to the guy on the roof?
Investing in Bitcoin begins with GBTC.
You're finally doing it. Chasing your dreams and following your heart to a new beginning. At Amica, we believe in life's extraordinary experiences. So much so that we built a company around it. With every phone call, every quote, every claim, we are an insurance company that delivers an experience that meets the only standards higher than ours. Yours. Experience Amica. Auto, home, and life insurance.
An active lifestyle means you never stop moving. That's why only Theragun devices are designed to release your body's deepest muscle tension, so you can do the things you love. You only have one body. Make it a TheraBody.
All right, Pete, unusual. I'm not going to read any stock names or tickers. You just tell me what you have.
All right, I'm going to give you Boston Scientific first, Scott, and that one's pretty interesting because somebody's rolling up. They're actually coming from April, and they're still buying. They want to be in May. They're in the May 7 calls, the 43 calls. Bought about 3,500 of those, going for about 85 cents. Stock was 43.50, give or take at the time. Next, I got Las Vegas Sands, another one where they're rolling up and they're going out a little bit. So they're buying the June 4th expiring 63 calls. Those are going for about $1.70, Scott. Stock was trading right around 60 and a half. They bought 25,000 of these calls. They spread it off selling upside calls as well. But that's somebody who says, hey, Las Vegas Sands is going higher sometime between now and June.
All right, good stuff. Thanks, Pete. We'll take a quick break. We'll come back. We'll do final trades next.
Lately, it's been hard to think about the future. But thinking about the future is human nature. At Edward Jones, our 19,000 financial advisors listen and work with you to create personalized investment strategies to help you get back to drafting dreams and building your future. Edward Jones, it's time for investing to feel individual.
I really hope that this vaccine can get me one step closer to him. To our huge wedding. To give high fives to our patients.
To hug Black students.
With every vaccine, CVS is working to bring you one step closer to a better tomorrow.
Millions are saying yes to Allegra, the #1 allergist-recommended non-drowsy brand. Allegra works 2 times faster than Claritin, and unlike Zyrtec, it's non-drowsy. Say yes to the fastest non-drowsy 24-hour relief. Allegra.
So you're a small business, or a big one. You were thriving. But then, time to think, plan, pivot. How do you bounce back? You don't. You bounce forward with serious and reliable internet, powered by the largest peak speed network in America. But is it secure? Sure, it's secure. And even if the power goes down, your connection doesn't.
So how do I do this?
You don't do this. We do this together. Bounce forward with Comcast Business.
Who is USAA made for? It's made for him, a veteran who honorably served. And it's made for her. She's serving now. We also make USAA for military spouses and their kids. Become a member. Get an insurance quote today.
The most popular place to find some space.
I've had so much to say over the past 2 years, wanting to set the record straight about what it was that happened.
She should be dead.
I'm just gonna say it all, and then if we don't want to use any of it, we can take it out. Demi Lovato dancing with the devil, only on YouTube.
Friends, it's just a great experience.
We are not a discount brokerage. These are top local agents that'll get you the best results.
Missed the show? Don't sweat it. The Halftime Report now has a podcast. Market-moving interviews, call of the day, unusual activity, and of course, Ask Halftime. Look for us on Apple Podcast or your favorite podcasting app and subscribe to the Halftime Pod today.
The way we access information and communicate has evolved. This evolution has resulted in the integration of telecommunication, media, and internet companies. The Communication Services Sector Spider ETF offers access to the entire communication services sector while reducing single stock risk. The Communication Services Sector Spider, the next chapter in investing. Before investing, consider the fund's investment objectives, risk, charges, and expenses. Go to sectorspiders.com for prospectus containing this information. Read it carefully.
Dignity. It demands a rapid COVID test because we all deserve an answer. It demands your heart stays connected to your doctor so you know it's beating as it should. And a rapid test to help evaluate concussion in case something were to happen. At Abbott, we fight for these moments, developing life-changing technologies because dignity demands it.
You need a financial plan that fits the way you want to live in retirement. A plan that can help grow and protect your money, now or in the future. With an annuity in your plan to help cover essential expenses, you can live the retirement you want. The right financial professional can show you how. This is what an annuity can do.
Yes, hello, I'm so...
Go with us and get millions of flexible booking options. Expedia, it matters who you travel with.
These days, you have to keep everything moving and reinvent the wheel.
We got a huge increase in orders.
With a hybrid,
I think we can handle that.
you can do both.
I'll be right in.
That's why manufacturers are going hybrid with IBM. With Watson on a hybrid cloud, factories can use AI to automate the little things so they can focus on the next big thing. Businesses that want to innovate at scale are going with a smarter hybrid cloud, using the technology and expertise
Nice work, guys.
of IBM.
I look for the WELL Health Safety Seal at my favorite places.
It means health and safety measures have met rigorous scientific standards.
Look for the WELL seal.
Look for the WELL Health Safety Seal outside and feel safer going inside.
All right, Pete. We're going to do final trades in a second, but I do have a Twitter question I wanted to give to you from Gabriel Rivera, who says, hello, I have a question for Pete. What do you think about DraftKings on next week's earnings? Love the show. We learn and have fun at the same time. Gabriel, that's what this thing is all about. I'm so glad that you think that. Thank you so much for the question. Pete.
We appreciate you, Gabriel. I will tell you real quick, Scott, I love this name. I've been in and out of this name. I just had calls just earlier in the week. I just sold out of those for a loss, unfortunately. But going into earnings, I absolutely would go in with options. I think it's too high risk to go in there with stock right now.
Okay, thank you. Give me a quick final.
Yeah. Oh, I'm going to give you Tesla. I just saw some huge call buying in there. I think she's going higher.
All right, we got to be pretty quick. But Brenda, go ahead.
Mondelez, so they have industry-leading organic growth. They are subject to higher input costs, but they've hedged a lot of those, and valuation's reasonable.
All right, good stuff. Have a good weekend. To you, Shan?
Analog Devices, ADI, report in a couple of weeks, and they've got the Maxim acquisition closing this summer.
Okay, you got less than 20 seconds left. I got to just tell Weiss that before he starts. Go ahead.
Here's a short book report, Cliff Notes. XPO Logistics report Monday, and you saw what happened to FedEx and UPS.
All right. Oh, well, you finished well. All right, good stuff. Thanks, everybody. Thanks for watching, too. Good weekend. The exchange starts now.
Thank you, Scott. Hi, everybody. Happy Friday.